Are you bullish or bearish? Are you digging a cold winter to go and hibernate in, or a hot and spicy summer full of market euphoria? I'm guessing that many of you watching this channel are part of the latter. You want a hotter than hot summer with the bulls. Well, them bulls are in full force, so let's stampede together, because it's time for Chico Crypto. So let's begin today off with a little Bitcoin price action analysis. Things weren't looking good after the fall from 42.5k last week. We double bounced off of 37.5k support. And after the second bounce is when things turned bullish for the weekend. From that support all the way up to 46,000 as of yesterday. Just a 22% increase over the course of less than 5 days. Short term, the markets are looking hot as Bitcoin is back to a price level we haven't seen since the middle of May, or 3 months ago, a whole quarter. Yeah, it's been a quarter of a year where the markets have been in this lull, where no one knows what is going to happen. People still can't decide if that was the great bear trap of 2021 or this is the great bull trap of 2021.
It's a trap!
So what is it, Chico? Bear or bull trap? Well, I have my opinion and I've had it for a while. It was a bear trap, the great bear trap. But today we're going to look at the reasons for both, as there are things going on in the space which call for both bear and bulls. So number one calls for the bears if something isn't done, and those who are trying to get it passed get it slipped right through. It's what's going on within the United States political system, in Congress, in the Senate. It's that infrastructure bill everyone has been hearing about. It was a wild weekend regarding this. First, it seemed like it was just going to pass. Then a couple of senators put forward an amendment to stop the crazy reporting requirements, which broadly defined a crypto broker by not defining who is a crypto broker. Then another amendment was put forward, which would only relax broker requirements for proof of work cryptocurrencies like Bitcoin, not for proof of stake cryptocurrencies like coming up with Ethereum. This was all put up for debate and consideration, and by yesterday, Monday, there was no decision. It looked pretty bleak yesterday out the get-go, aka bearish, like no amendment would get passed and the original language was going to go through. Until another amendment was put forward yesterday. Adam Cochran covered it on Twitter and said, "Toomey just announced bipartisan amendment with Sinema, Portman, Warren, and Loomis aimed at revising the bill language. Would need unanimous consent to be brought to a vote, so a single senator could tank it, but apparently carves out nodes, validators, and devs. Huge deal. Light up the lines of your senators to vote for this amendment." So why is this one a huge deal? Well, it's bipartisan for one, meaning there are contributors to the amendment from both the Republican and Democrats. Its language isn't drawn just from one side, but both sides. And it needs that type of support because it needs unanimous consent from all senators, Democrat or Republican. So what's going to happen in the deliberations? Well, no one knows the full answer, as anything could happen, but it looks like this newest amendment has the best chance of being added to the infrastructure bill. Let's hear what Senator Pat Toomey had to say yesterday during a conference on this newest amendment.
Senator Wyden put out a tweet, which you may have seen, and he said, I'll just quote it because it's short. It says, "We've been working hard to get a deal. I don't believe the cryptocurrency amendment language on offer is good enough to protect privacy and security, but it's certainly better than the underlying bill. Majority Leader Schumer says he won't block a unanimous consent request on it." So we're going to make a unanimous consent request. This will be the first time on this bill that I'm aware of where we have had bipartisan Treasury support and both of the lead negotiators all on the bill. So I certainly hope that, given the near universal acknowledgement that there is a problem and the fact that we have a bipartisan solution, that enables us to get the vote that we want.
That is good to hear. Again, bipartisan. It has Treasury support. Both sides' lead negotiators are supportive. This looks like this newest amendment has the best chance of passing. Hey, we have now switched from bearish to kind of bullish. Although Senator Cynthia Lummis tweeted about this and slapped a reality check across everyone's faces. She said, "The fight is on. Unfortunately, it will likely be epic. Expect 12 rounds. This amendment dust-up is just a warm-up. I believe we will get an acceptable result today. We'll keep you updated, but want to say thanks for opening senators' eyes to this big, diverse, and impressive community." This is far from over. Expect an epic 12-round fight. They do hope to get an acceptable result with the amendment today, aka yesterday, but that was no guarantee. They are going to hopefully have the full decision come today. So back to neither bearish or bullish. Pretty much we are still in major limbo regarding the bill, although things are looking better than they did over the weekend. I'm hoping for good news today, but I shoot these videos 24 hours in advance, so I have no idea of what went down. So that infrastructure bill with the crypto regulations and reporting requirements was bearish from the get-go. But if the crypto community is able to put up a fight and stop the craziness of that original bill, that would be so bullish. It would show the crypto community has power in American politics, which is a sight I never thought I would see. Another sight I thought I would never see, Tether USDT putting out a solid attestation of their reserves. Yeah, this is bullish news no matter where you are, whether you think Tether is a giant scam or if you believe Tether is fully backed. This is good. The attestation broke down their current reserves. Over 30.8 billion is in commercial paper and certificates of deposit. Over 6.2 billion is in cash and bank deposits. Just over 1 billion in reserve repo notes. 15 billion in treasury bills. Over 2.5 billion in secured loans. Over 4.8 billion in corporate bonds, funds, and precious metals. And finally, just over 2 billion in other investments, which includes digital tokens. Tether is attested as being fully backed for the second time this year, and there's no denying that the markets like to hear this type of thing. But regarding the mix of assets backing Tether, it's even more bullish. The last time Tether attested, it was in May, 3 months ago. And as we can see back then, it only had 3% of its assets as government T-bills, aka treasury bills. With yesterday's number of over 15 billion in T-bills, that puts this number now at 24% of their assets in this category. Now, if this is true, a growth of T-bills from 3% to 24% in just 3 months, it's ultra bullish for the markets, as T-bills are one of the safest forms of assets out there. Compared with anything else they could hold, they are ultra safe, which means Tether's backing is getting better and safer. On paper, they still need to do a full audit, which hasn't been done. This could all be a fugazi, these attestations, by a Cayman Island company.
Fugazi, fugazi, it's a wazzy, it's a woozy, it's a fairy dust.
Although this caused Tether to do something which it hasn't done in a long time, print those USDT. 1 billion USDT were minted and created. This was the first time in over 2 months those printers have gone brrrr, pretty much since the markets dropped and became stagnant. Fresh new Tether just might equal a bullish pump incoming soon. The markets didn't really pump without Tether, they needed USDC. Now that Tether's back to their normal printing schedule, will the markets pump like the beginning of the year? Well, down below, Tether CTO Paulo chimed in on this print. He said, PSA, 1 billion USDT inventory replenish on Tron network. Note, this is an authorized but not issued transaction, meaning that this amount will be used as inventory for next period issuance requests and chain swaps. So Tether is anticipating issuance requests for this next quarter, aka for the rest of the year. That statement by Paulo basically is saying they anticipate people to request Tether, and that tells me it's going to be bullish, leading us right into the last hurrah. But things aren't only bullish for Tether, they are also bullish for the other stablecoin creators in the space, like the one who held up the markets in the meantime. Circle, the creators and issuers of USDC, announced yesterday they were looking to become a full reserve national digital currency bank. In the blog, Jeremy Allaire, CEO of Circle, said, "We are embarking on this journey alongside the efforts of the top US financial regulators, who through the President's Working Group on Financial Markets are seeking to better manage the risk and opportunities posed by large-scale private sector dollar digital currencies. In the coming years, we anticipate that USDC will grow into hundreds of billions of dollars in circulation, continue to support trillions of dollars in low-friction, high-trust economic activity, and become widely used in financial services and internet commerce applications." As of right now, USDC commands about $27.5 billion. Circle expects within the next couple of years that number to grow into the hundreds of billions and support trillions of dollars in economic activity. Can you say bullish? Although it wasn't all good bullish news for Circle yesterday, there were signs of the bears making their way into the headlines too. It was announced that the SEC had charged its former exchange, Poloniex, with running an unregistered digital asset exchange. Hey, wait, I thought Justin Sun owned Poloniex. I thought Circle sold it to him. Well, as we can see from the SEC press release, the SEC's order finds that from July 2017 through November 2019, when Poloniex sold its platform to Justin Sun, Poloniex operated a web-based trading platform that facilitated buying and selling digital assets, including digital assets that were investment contracts and therefore securities. The fine for that was just over $10 million in total. Was this just a payment from Circle to be able to do their national bank? Or is the SEC going to go after other crypto exchanges soon too? Well, if they did, that would be bearish. Cheers, I'll see you next time.